This is going to be the biggest crash,
Right.
the biggest downturn of your lifetime is what I'm saying. And most of it's going to happen probably in 2022.
Like how big in terms of percentage?
Okay, so first of all, I've studied every major bubble in history and the first crash. Now, I'm just saying the first crash, when the bubble finally gives, okay? Like in 1929, or in 2000, in May of 2000, when it first crashed. The first crash averages 46% in just 2.6 months. Now, when a major bubble of this magnitude, like 1929 or 2000 or now 2021 crashes, the whole crash tends to be about 80 to 90%. 1929 was down 89%, 78, in 2002 crash, the NASDAQ was down 78%. I'm saying stocks in general in this crash will be closer to the 29 to 32 crash. I'm estimating 87% for the S&P 500 and maybe slightly higher for the NASDAQ. So this is not something to sit through and just rebalance, as financial advisors say.
Yeah.
You have to get out of the way of this, and then we will have the buy opportunity in investments of a lifetime in around late 2023 or so.
Okay, so a very deep and steep decline of about 40% plus over a 2 months period.
The first crash, the whole crash is going to be 80 to 90%.
Right. Well, but Harry, the last time you were in Kitco, you told my colleague David Lynn that you expected the stock market peak in January of 2021 and then a major crash, much like what you're describing now, by April of 2021. You were calling for a 40% crash by April. You then said that June would be when the markets would collapse. Obviously very hard to time the markets, but the S&P 500
it is
closed
extremely
out.
hard to time something.
Right.
Not natural. I predicted the 2007 top 20 years before it happened. That was a natural boom driven by real consumers and investors. You've got governments fighting this crash, and so it is impossible to predict exactly when it's happening. I am telling you, and I will stand by this, we are going to see, and I think it's going to happen in 2022. You cannot tell exactly, but the signs are recently, what we've seen one index from the corporate bonds to then the small caps and Bitcoin, and then the NASDAQ peaked in November 22nd, and it looks to me like the S&P could have peaked basically yesterday. So we see the succession of peaks down into narrower, more large cap. That's a classic long-term top. That's why I'm saying it's likely now, but there is no way to tell this until it happens. But I am warning people with unbelievable analysis in history of every bubble, major bubble in the last 150 years, that first crash will be 40 to 55%. So fast you will not see it. So if you wait to see if I'm right and take that risk, you are going to be hit very, very hard. And history is very clear about that. No exceptions to that.
Okay, but Harry, if people had listened to you in April of last year, and again,
they missed some of the bubble. I surrender. You're right. But if you don't listen to me now, you're taking the biggest risk of your life. Now you can make your own judgment. I have no problem with that. This is the hardest damn thing a person can possibly do, is fight a bubble, which every central bank is so committed to keep going that they will print $5 trillion. Yeah, $5 trillion been printed just since COVID by the Federal Reserve. That's what I'm fighting. But I'm telling you, if you think you can keep printing exponentially more money and keep a bubble going forever, then you have not studied history and you're the insane one. So I'm standing by my forecast. Yes, I'd rather be early than late. What did I just say? First crash could be as high as 55% in 2 to 3 months. That's what we're looking at. You want another 5%, 10%, maybe I'm early, fine. If you risk that and you're wrong, you could be down 50% before you know it. That's just what I'm telling you.
Or 20% if one would have pulled out in April of last year, as you suggested then. But I hear your point. Look, it's very hard to time the markets.
You got to weigh the risk versus the returns here. Every time this market goes up another 5 or 10%, the downside gets higher and the risk of the bubble bursting gets higher. But you're right, there is no way when a bubble is being orchestrated. It's one thing when it's a natural bubble, okay? And when it's being orchestrated by central banks and they're fighting it, there's no way to predict it exactly. But you got to know the risk.
Well, to your point, because as you say, as you contend that the bubble is being orchestrated by central banks, and the Fed. And the Fed is clearly aware of previous taper tantrums. Managing the stock market is obviously not an official Fed mandate, but it may as well be the way the Fed responds to market reaction. So you don't see the Fed stepping in, trying to prevent a crash, especially one as dire as you are forecasting?
What are they doing right now? They're stepping back. They're stepping back cautiously. Now, once you start stepping back, if you turn around and instantly goose it again, you're going to look like you're idiots and you're crazy. So they're already compromising themselves. Why? Because they keep pushing the bubble bigger, and the economy, you can only squeeze so much juice out of a lemon. The economy is not responding. I mean, it's $5 trillion in 2 years. We should be growing at 20% a year. So you get less and less as this escalates until basically the central banks lose the war. There is no way they win this war, because next time, if they printed 5 trillion since COVID, next time when we crash, they're gonna have to print 10 trillion. Where does it get so ridiculous that nobody has any faith in anymore? And that's what makes it hard to predict. I'm saying I think we're there. That's just my opinion. You can ignore it all you want at your risk. And I'd be glad to come back on in 4 months. I think this is going to happen first or second quarter. I think that first crash is going to happen within 2 or 3 months as usual. And if it doesn't happen by then, I'll just say, okay, I was wrong. But
well, look, firstly, Harry, we have you on here because we want your opinion. And as I say, I applaud you for sticking your neck out and giving timelines when a lot of analysts avoid specifics.
Who will do this these days? Nobody.
All right, so you're saying first quarter, by the end of the first quarter of 2022 is when this bubble begins to burst.
Yeah, I think it begins in the next 3 months, and you will see that first crash by history within 3 months of that. So in the first half of this year, yes, I think you're going to see this 45 to 55% crash, and it will come very fast when it comes. And how much more can the market go up when it's already gone up this much against all the trends? By the way, the demographic trends, which I uniquely created that system, which caused the greatest boom in history in 2007, have been down from 2008 and do not bottom in demographic trends until late 2023. So we're fighting slowing natural trends in spending. And of course, when the government makes money easy and sends money, they're sending me checks in the mail. This is insanity, okay? They're not even being discriminating and sending it to the everyday person. I'm getting checks in the mail. So of course people are going to spend more money. But
so what's the trigger here, Harry? What is the straw that breaks the camel's back?
You know what it is? There doesn't have to be a trigger. You know, the 2000 top, the first tech bubble, there was no trigger. There was no recession, no big slowdown in the economy. Stocks just got so extremely up. And then what happened was the internet stocks, which were babies back then, came on top of the NASDAQ stocks, and they were part of the NASDAQ, and they really triggered the bubble because they threw the NASDAQ straight up. Well, now the baby stocks are the cryptos, and they're not in the NASDAQ, okay? But the cryptos are doing the same thing the internet stocks did in 99, early 2000. And so it just goes until it gets so extreme that the smart money starts selling.
So you think this next crash will be triggered by people pulling out of cryptocurrencies? You think that's the string that starts
I think
to
the
unravel
smart
everything?
money will start shorting stocks and cryptos, and then all these people that piled in, it's the dumb money, I hate to say it, the everyday person that piles in the last 6 to 12 months, just like in 99. And when the smart money starts selling, it doesn't take much for them because all these people are overcommitted, and then they get scared because they're not sophisticated investors. So all it takes is to get the markets to go down, I think, a little over 20%, and people will start panicking. But it takes the smart money to trigger it. The dumb money's not going to trigger this. The smart money's going to say enough is enough. And again, that you just have to look for and see when there's market weakness. And we had the first week of the year is usually strong. Well, guess what? We had strong market weakness on Wednesday here on January 5th. Okay, why did that happen? There was no reason for that. No reason whatsoever. There
was a reason. Markets were responding to the Fed minutes, which indicated that the tapering scale is going to accelerate, as well as potential raising rates and hikes. Fair enough. But we're getting a sense of a more aggressive Fed here. But Harry, tell me, how are you positioned then? If this is the scenario that you're forecasting, how are you positioning your assets and your portfolio?
Okay, it's really simple, and that's why this debate with Peter Schiff on January 19th we're having. You can see this two ways, that what the governments keep printing more until you get inflation out of control. And of course it's 6.8%, and we're going to get a new report on the 12th of January soon. It's probably going to be higher than that. And you get like an inflationary blowout. I'm predicting that when stocks and financial assets start to crash and people start selling those, you're going to get deflation. Money gets destroyed. There are trillions and trillions and trillions of dollars been built up just in financial assets from this money printing. It hasn't caused the economy to be super strong. It's caused the biggest financial asset bubble in history. When people start selling those financial assets, wealth disappears and people panic more. And then that causes the recession. The financial asset crash actually triggers the recession, which is more what happened in the 2000 crash. First tech bubble burst, now second tech bubble, and bubble in real estate, second bubble in real estate, second bubble in gold. Everything is bubbled this time. So it's the financial asset bubble that triggers a recession, and then the recession makes the financial asset bubble crash more.
All right, so you're saying that there are no safe assets to be positioned in for this?
They're always safe assets, it's just narrow. I'll tell you what the safest asset is, and this is true in the early 30s, as in 2008. Gold went up in the early part of that 2008 crash, and then when it got severe in Lehman Brothers, gold went down, everything crashed except for one thing: US Treasury bonds and AAA corporate bonds. So it's the long-term bonds that lock in a rate. Like people say, well, wait a minute, the Treasury bond, 30 years, 2%. How can it go much lower? Oh, it can go to damn near zero, and there's plenty of government bonds around the world that are already at zero or negative. So the bonds tend to react to the downturn. The safe bonds, only the Treasury bonds and the AAA corporates go up in value. Other bonds have risk of default going up in such a downturn, so they go down in value, and of course stocks go down the most, and real estate in between. So that's what happens. The Treasury bonds and the 30-year is the longest duration. I'm telling you, you can be in cash and preserve your assets while everything go down. That's good. If you want to do great, you buy the 30-year US Treasury bond, and that can go up 40 to 50%, and it did so in 2008. For example, and this downturn is going to be worse for real estate.
Okay, so
worse for stocks.
You're recommending that people pull their money out of the markets, out of the housing market as well, out of cryptocurrency
as much as you can. I mean, people are not going to sell a home; they're going to be in the rest of their life. But if you have a vacation home that you use for a few weeks a year, yeah, I would advise selling it. Vacation homes bubble more and go down more. So yes, sell the risk assets you don't want to hold through this, which is everything you can. The more you sell, the better. That's all I'm saying. It's your choice of what you sell or don't.
So sit in cash, and you've got the likes of Ray Dalio and others saying cash is trash, that the last thing you absolutely want to be doing right now
Ray Dalio is
making
a huge, I love Ray Dalio. He's making a huge mistake here. He has not studied these bubble crashes like I have all throughout history. Cash is good. Whatever you have, you pull your money out of the markets at the highest I'm telling you, the highest you're going to see stocks and real estate, maybe for the rest of your lifetime, okay? You're pulling it out at the top, and then everything goes down, and you rebuy with that cash. That's a great strategy. But if you put it in the Treasury bonds, they will be the one asset. Treasury and AAA corporates, the very safest long-term bonds, have proven, especially in the most recent crash, 2008, to go up 30, 40, maybe even 50%. So you're growing your money in the crash and then rebuying real estate and stocks at the lowest price your lifetime. I know this sounds extreme. I don't like to be extreme, okay? I was bubble guy, and everybody loved me when I'm always gonna go higher and higher. No, this is the reality. Greatest bubble in history, crashed. Governments pushed it up totally artificially more than any time in history. This entire rally since 2009 has been 100% artificial. And now you got to crash and shake out all that nonsense, and then you can reinvest again. Now, if you want to sit and wait, sit and wait. I'm just telling you the reality of what history says. If I'm right, and the biggest bubble in history is about to burst,